Good morning, good afternoon, good evening, wherever in the world you are. A great welcome to you from here, from Malaysia. Now, this is genuinely a global conference. We are really privileged and honored to have Karen Khan sitting from New York. I am based currently in Dubai, and all our audience is in Malaysia and South Asia. And we are really privileged to be here. It's just was one of those wonderful things. I wish we were there in person. But anyway, the next best thing is the world is going through a critical moment in time. The pandemic is now in its second phase. We are now truly into innovating out of this pandemic. We have put all of those things behind us and now looking towards an amazing great future. Within this great future, what used to happen in decades is now happening in months, and sometimes even in weeks. So all of the fundamentals are totally changing. Within this, right at the center of all of this, is entrepreneurship, our startups, our new companies that are taking hold. And as the diversity of new experiences are happening, it is absolutely critical that women play an amazing and pivotal role in this future development and the future creation of our environment and our businesses. So today is focused on that specific area of women, entrepreneurs, startups, funding, and going beyond. And we couldn't be luckier than to have Karen Khan, who is a global player in this business, and she will come with her insights, her thoughts, her experiences, her successes, and even, and more interestingly, some of her failures to inspire us and to guide us. So please welcome Karen Khan to this amazing event. Karen, over to you. Please share with us who you are, introduce yourself to us, and then we can take it from there.
Thank you so much, Tarek. Hi, everybody. My name is Karen Khan, and I am the founder and CEO of Ifundwomen. Ifundwomen is the go-to funding marketplace for women-owned businesses and all of the people who want to fund and support them. And the problem that my team and I have been working on solving for the last 5+ years is that there is a complete lack of funding options for early stage women entrepreneurs. So less than 1% of all companies, regardless of the gender of the founder, will ever raise venture capital. Think about that. Less than 1% of all companies will ever raise traditional venture capital. So, and this is universal. What do the other 99% of startup founders do around the world? They go into debt, they max out their credit cards, they take out loans to fund a business that may not work. Most startups fail, and that's okay. But we always say at Ifundwomen, don't fail going into debt, because there's nothing worse than having, a failed startup and then having to pay off the debt. So when you think about, and then going back to sort of venture capital, so for the women watching, don't let all this doomsday sort of data that I'm laying out here dissuade you from starting businesses. And I'll tell you why after I tell you the rest of the doomsday data. So out of the roughly, a little less than $300 billion in venture capital deployed in 2020, all female founded companies received 2.3% of it, 2.3%. And female founders of color received 0.64. So again, that generally means that 97% of all of venture capital goes to men.
Right. And is this just gender bias? Is this unconscious bias? Is this a systemic issue? Where is this coming from? Because it just doesn't make sense. I mean, 20%, I would have thought even that's bad, but one can sort of engage with it, like in boards. Most boards in the US are around 20% represented by women, but at 3%, what's really going wrong there?
So everything that you just listed, Tarek, so it's unconscious bias, conscious bias, and systemic biases that have been baked into our financial services system over centuries. And it's not just relegated to venture capitalists. You know, banks, when women and men entrepreneurs go into a bank, and if they have analogous businesses, same metrics, same balance sheet, the same thing, women get lower loan amounts because of our gender, and we have higher rates that we have to pay on the loan. And that is factually happening in this day and age, at least in the United States. But with venture capital, the biases are just blatant, quite frankly. And what is now was known as unconscious bias is now politely known as founder pedigree. And I have faced this myself, where Ifundwomen, my company, we raised a successful seed round when in our second year of business. And in our fourth year of business, we were going out to raise a Series A. Now, mind you, at that time, we had over $1 million in revenue we were doing a year. In fact, we were on track to go from $1 million in revenue to $5 million in revenue, which we did year over year. So we 5x'd our revenue. We became profitable. We had thousands of customers. We have inspired and empowered women around the world to raise over $100 million in early stage capital that they would have never had access to. We have created tens of thousands of jobs globally in the global economy. This little startup that could, right? So you would think, oh my gosh, who would not want to fund this company? I mean, based on numbers, traction alone. And we had such a hard time raising that Series A. In fact, we failed in the first attempt. And, you know, what was interesting about it was we got really far down the path with some name brand funds in Silicon Valley and in LA. And the due diligence went on and on and on. You know, after the financial due diligence, they did, you know, due diligence on our data stack. They were interviewing our head of engineering, our head of product, and that was fine. I thought that was normal. P.S. That's not normal for a Series A. It's just not. So we were going through just an inordinate amount of due diligence that went on for months. And I'll fast forward the personal story. One fund who wanted to lead the round, and we were looking for a lead, and they were going to lead the round and write us a $5 million check. They were in it to win it. So they said, we're so excited, we're going to bring you in. At this point, it's just perfunctory. You know, you've passed every test. I was like, at this point, 4 months later, thank you. They had us come on a Zoom, and we thought this was another prep meeting. And the two partners looked at us, and they looked like they were devastated. So they said, Karen, they don't want to take the meeting. And I said, why? And they said, well, you're co-founders and you really don't have founder pedigree. And listen, I grew up at Google and YouTube. I've been in big tech for 15 years prior to starting my own company. I know what founder pedigree means. And I've been in Silicon Valley long enough to know that that means the following. For founder pedigree, you have to have, number one, a successful exit in the past. Okay. Number two, you need to have been an engineer or a lead product manager on a very successful product at a unicorn company. Or number three, you need to be a friend of the fund. Okay. So I was none of those things, and neither were my two co-founders. It almost didn't matter that we had already built and scaled the thing. We'd done it. It was very, very, so the net is it's bias. And I'm not even going to call it unconscious because it's just bias.
Yeah. Karen, I'll take a different perspective here because I know the Asian culture quite well. And founders' pedigree in Asia is a very strong force, I would say. The young people have to come through a specific university. from a certain type of background, and not even go as far as you're talking about, but just to get past the first gate, they need to be able to show much more. My more probing question on this is that in this new world, is that kind of founder pedigree really that necessary? Is the checklist for our due diligence the same anymore? Because now we're getting peer reviews from GitHub rather than a degree from MIT as the reason for you to be hired. So surely the due diligence book should be thrown out of the window and should restart again and see ourselves from a different perspective, and particularly in the context of Asia.
Well, absolutely. And to me, it really should come down to facts and numbers. And, you know, if we had no biases and, you know, founder pedigree and pedigree in general in Asia, in the United States is absolutely real. So, you know, if I'd come in from, you know, Harvard undergrad and Wharton Business School or inverse them, that would have helped. But at the end of the day, the venture capital business is about making money. And when they think about, you know, they say yes to probably less than 1% of deals that they see. So for all the thousands of decks that they're getting from founders, they're going to fund, they're making bets, big bets on just 1% of them, right? So if they are not 100% sure that you can do it, and the only way to prove that you can do it is by doing it before, then you're out. So if you don't have access, if you don't, you know, if you're a woman, which, you know, the data shows that we historically have not, there's not been enough time to show that enough women have exited successfully. And we're getting there. We're absolutely getting there. And more women-founded companies are going public, which is wonderful. More women-founded companies are exiting. In fact, women-founded companies exit faster and for more money than our male peers. Another great data point to show that, you know, this founder pedigree is just not working, quite frankly. It's actually bad business. Is Boston Consulting Group did a study on the efficacy of women entrepreneurs versus male entrepreneurs. And in their study, they found that women founders deliver a 2 times per dollar invested ROI than their male founders. Another study that I love was First Round Capital, which is a large seed stage firm here in the States. First Round Capital did a study of 300 portfolio companies, and they found that the portfolio companies with a woman founder drove a 63% higher return for the fund than the other companies. And truthfully, mixed gender co-founder teams, their performance is just so much better in terms of the bottom line. So, you know, the mixed gender co-founder teams are actually doing quite well in terms of raising venture capital, and those numbers have gone up. So we have, you know, we run Ifundwomen, which is a startup funding platform for women. Of course, we have men on there, and we encourage mixed gender co-founder teams because we know that they're going to perform better. I get asked all the time, Tarek, from female founded companies, do I need to recruit a guy to be a co-founder? And I say, yes. I don't lie to them. I don't candy coat it. I'm like, honestly, if there is someone that you've been working with or that you genuinely want to bring on, and that's going to help you exponentially in your fundraise and in your business success. Because again, diverse brains, whether it's gender or ethnicity or where you're from.
I was just basically saying that the issue of ethics, of diversity, of that balance, of equity, all of those elements keep coming in within our algorithm as we are making those decisions to be able to make successful and high quality decisions as opposed to just biased ones.
Absolutely, Tarek, and I couldn't agree more. And in fact, you know, while Ifundwomen is a funding marketplace with multiple products that help women raise capital, we really are, you know, kind of becoming a data company. Not that we sell our data, and that's not our go-to-market, right? But we have so much data on our members and our customers on the efficacy of them as entrepreneurs and how well they do. And so essentially we're rewriting the code on who should receive. We are rewriting the code with all of the inputs that we have, the real inputs on business success from our members, right? Because they tell us, they report in on their business success. They report in, annually on their business growth, their challenges, their fundraising, and our members are just superior. They just are. They're superior entrepreneurs. 34% of Ifundwomen alumni go on to raise traditional venture capital. That is so far head and shoulders above the terrible stats that I give. We are fundamentally preparing our entrepreneurs to create better, more scalable businesses faster without going into debt, because we're also teaching them how to do it through our ed tech. But most importantly, the data that we have and that we will continue to collect will be the defining source for how women get funding, whether it's through a loan, whether it's through venture capital, whether it's through alternative funding sources, period. And that's what we're trying to do, is we're trying to rewrite.
Thank you for that. My next question is really related to some stories that you have gone through, and what sort of women really inspire this huge startup and entrepreneurship momentum that we are seeing. I'm really looking at human stories, people who come in just for a product, another app or another fintech product is fine. But there are a lot of women who are out there who are fundamentally looking at making a difference, who are fundamentally looking at changing something, so making money while doing good, because they are more connected with the society and with the community. Do you have a story in mind that you could share where somebody like that came through to you? The numbers sort of made sense, but the passion totally made sense.
Well, besides our own story. So I'm a second-time startup founder. My first startup was a spectacular or an engineer. So when I went to start my own company, and this was my first startup, which was also a software company, I didn't know what I was doing. I really didn't know what I was doing. So we didn't fail fast and fail cheap. We failed long and expensive. I spent a ton of my own money putting into this company where I really just didn't know how to build and ship product using the lean startup methodology. The list goes on. The number one reason though why we failed, quite frankly, is we could not raise capital to save our lives. We couldn't raise capital. And here I was, this privileged white woman, had worked at Google for 10 years and was brainwashed into thinking that anything that I did I would touch it and it would turn to gold. Every venture capitalist would want to fund me. And, the reality is, for women, it doesn't matter. It's just not true. It's just not true. And so the first startup died, and as a Hail Mary to save the company, and we did a crowdfunding campaign. So going into the crowdfunding campaign, we were in desperate mode. We were like, we got to save the company. We're going to put up this crowdfunding campaign. And I'm like very confident, to say the least. And I was like, how hard could this be? Someone puts up a Kickstarter, they put up a video, they sell, how hard could this be? We did it. And let me tell you, crowdfunding is not easy. It's actually extremely hard. But what I did learn was that crowdfunding is simply just sales and marketing. And if you are good at selling your product, your service, your mission, your vision, or your dream to people who you know in your network who want to buy into it, then you, my friends, can crowdfund. At the end of the crowdfunding, the light dawned on Marblehead, which meant I said to myself, wait a minute, why aren't all startup founders starting their journey, their funding journey, proving demand for their product or service before they invest in supply? And by supply, I mean wasting years of your life chasing an equity round. Or we started voraciously Googling crowdfunding platforms for women, crowdfunding platforms that help you with your video, that coach you and teach you how to do it. Because again, this is not rocket science, it's bold. So we couldn't find one. And we realized that the funding gap problem for women was so pervasive and systemic that we sunsetted the first business. It was dying anyway. Here we are, years later, where we have crowdfunding is, of course, one of the products in the funding marketplace, but I mentioned the coaching. We built an ed tech into the marketplace because what we realized was that most entrepreneurs did not realize, and I'm not just saying women, most entrepreneurs, period, never really considered. So people were not thinking about crowdfunding as a great demand gen tactic to see if they had a business. So that was really our innovation around crowdfunding. We weren't saying, come and crowdfund, to, sell your speaker cooler or your Pebble watch. Come and crowdfund to prove demand for what you're doing before you waste money, hiring developers or building that app or doing whatever you're going to do with your business. You want to just see if people want to buy into it first.
The other area is angel financing, and again, it's an area which is very nascent in its development. However, when you really look down into communities and so on, actually, apart from the friends, family, fools, and followers, we also have those angel investors coming in with the big wings, and they're going out there and actually helping people to lift off. And I think that first $30,000, $40,000, $50,000 check is the game changer for a lot of people. And I'm wondering whether that's before crowdfunding or after crowdfunding.
So angel investors are, as you said, wealthy individuals who want to be part of the change and are betting on you as a founder. But angel investors are investors. They want a return on their investment, and again, getting savvier and savvier as the years go on. And so you want to be able to say to your angel, and by the way, crowdfunding is an amazing data point, a positive data point for future investors, including traditional venture capitalists. So that is a myth that traditional venture capitalists are going to look at your crowdfund and say, like, why did they have to crowdfund first? They love it because it shows grit, shows passion, shows you can actually like run a P&L and get people to buy into your product and service and get strangers to do it as well. So angel investing should be your second stop if you are going for venture capital. And we're talking about financial technology, we're talking about, data tech companies. So, crowdfund first and prove demand. And again, you don't have to crowdfund for a ton of money. You just want to crowdfund for a specific thing like building your MVP or doing user research or something that shows your angel investors that you actually know what you're doing, which is before you start any business, you have to do consumer research, customer discovery, interviews. And then, if you're in a great position and you're a developer, or you have technical team or a technical co-founder, and you can build an MVP or a prototype, then you're golden. When you do your crowdfund, you've got your prototype, and then you go to angel investors with this prototype and you say, hey, we've got 1,000 individuals who have contributed to our crowdfunding campaign, or 500 individuals, it doesn't matter, depends on the business you're in, who have contributed, who want to actually try the product. We've got our proof of concept. We now need $200,000 to actually take the POC and create V1. And for any savvy angel investor, if you look at that trajectory, you're in, you're a yes, as long as you're betting on the founder, who is typically someone you know. And if they come to you with those proof points, it's a no-brainer.
One of the other ways I framed this question in this conversation is the incumbents, which are the big banks, the financiers, the VCs on the one side. And on the other side, we have the insurgents, the challengers, the startups, and so on. And there is a vested interest for the incumbents to remain the leaders. And therefore, the people in the middle are the regulators. They are the ones who should make it easier for the young fintechs and the new companies to start bubbling away. And part of their role should be to really facilitate that process. while talking to the incumbents and saying, folks, you need to be sharper, smarter, lighter, agile, and so on. So I think the regulator plays a really important role in the middle. You know, governments, politics, all of those things come in the middle to get this thing moving. Because I think as we look into the future, one of the other statements I make that nobody is too big to fail and nobody is too small to succeed. So what we need now is actually to look at those nuggets, those amazing diamonds in the rough that are there. These are the young startups and so on. A lot of them are going to be women, I am sure, is to bring them and find them, polish them, and take them forward. So from your experience, and you've got amazing pedigree in terms of doing this and a lot of data points, what can we do at this point in time? What are the regulators and the people on this particular program? What are the top 2 or 3 questions they should be asking themselves now and say, let's get these insurgents and challengers encouraged, and let's help the incumbents also to find ways to balance and bridge each other. We're all in this thing together to create abundance. We're not there to fight each other.
I love everything you just said, Tariq, and I was nodding in agreement. I was about to like high five you and all the things. So really, you know, it's a challenge, but well, it's not a challenge. It's a challenge for any of the regulators and the government to care. And the only way you get people to care is by showing the data. And what we found, at least in the States, in the last well, since the beginning of time, that even though the data shows that women own 40% of the companies in the United States, but yet got 5% of the PPP loans, which for those who don't know, were the emergency loans given out during COVID. So disproportionately affected. So, you know, it's the world because of the pandemic, the health crises, the crisis with the earth and, global warming and all of these seemingly bigger problems. And not that they're not bigger problems, but it all kind of goes together. It truly all goes together. Entrepreneurship has really not been at the top of the docket in the White House, let me tell you. But it should be, because it's about the economy. I mean, that's the net. Funding women-owned businesses is good for the economy, period. We create jobs, we create more revenue, we create a healthier society, because women typically are starting businesses that are solving problems that are good for the world, right? It's very rare to see a woman starting kind of like an end of world business, or a business that supports like war or, crime, truly. So I'm sort of dumbing it down a little bit, but really, truly, it's all about what is going to drive your economy. Government, regulators, what is going to drive the economy? And what data do you have at your disposal that shows, wow, when women-owned businesses are funded, they're outperforming and they're creating more jobs and they're doing more for the bottom line of the economy and the GDP. So to me, that's just basic logic and data and math. And it again comes down to, how do we get them to care? Because I know I'm exhausted. And, it's not like this is a new problem. And it's not like this data, the studies that I talked about, the BCG study was years ago, et cetera. We know that funding women and diverse founders improve all metrics of success, from lifting up, from eradicating global poverty to lifting up communities and all of the things surrounding that, to creating a better environment for our children to grow up in.
Yes, indeed, she does. And I think looking through that lens, if we look at the culture in Malaysia and in the region around that, there is a lot of respect for women as a cultural issue. What we need now to do is to find a way to bridge that from culture into business and into day-to-day life. And I think those are bigger philosophical challenges that we will be encountering and discussing as we go forward. Now, to conclude, Karen, what are the final thoughts and comments that you may have that we may have missed? But what are the final thoughts and comments that you have that we should go away with? Some takeaways that we can think about and start on Monday morning.
Yes. Well, first of all, thank you so much, Tariq, and thank you everyone who's watching this. And I hope you are inspired. Here are the key takeaways. You can do it. You can do it, and we can help you. So I know I did a lot of doomsday and just frankly, fact giving about the state of, funding for women-owned businesses. However, we're doing it. I'm a living and breathing example, and we've got hundreds of thousands of them. And I find the confidence gap is real, and getting over, centuries and centuries of being put down as women and being relegated to making and raising the babies, that confidence gap and that sort of fear doesn't go away overnight. And we all have it. I have it, even though it doesn't seem like I have it. I absolutely have, imposter syndrome and, a confidence gap, name a day of the week. But the data shows that we are better entrepreneurs, and you can do it. If I can do it, you can do it. And I know that you're probably like, yeah, whatever, privileged white lady from America. I don't relate to you, but we have 75% of Ifundwomen members are women of color who do not look like me, are not from this world, are from a different, socioeconomic status by a measure of a lot. And they are crushing it and running multi-million-dollar businesses because they started with Ifundwomen. They learned the basics. They raised capital. They now are in Target stores. They're now, VC backed. They're going public. So you can do it. You can do it. You just gotta get a coach, get an Ifundwomen coach, come to one of our many free workshops. Email me, Karen@ifundwomen.com. Seriously, email me. I'll help you. It's really as simple as that. We just have to help each other reach around the world and hold hands, because we can do it. And I'm in it with you.
Thanks, Karen. And you're in it to win it. And I know you've been doing a lot of winning, and it's wonderful to see that. Just a couple of quick comments in terms of the final monologue that you had. And that is that women make great entrepreneurs. Mothers make great entrepreneurs, because what they are effectively doing is managing all of these moving parts and so on, and the rules and the muscles that they develop, and all the expertise that they build doing that is incredible, and that translates into entrepreneurship extremely well. And I think we should start respecting that and understanding that piece. As we look into the future of the world, whether we look at the fintech in the world and the broader financial environments, we are looking at a future of abundance. After every single crisis, there is a massive boom. Whether we look at the Spanish flu, the Second World War, the financial crisis, every single time. The last financial crisis, what followed? WhatsApp followed, and Uber followed, and Airbnb followed that. There was a boom of entrepreneurship and an explosion of opportunity. This pandemic will potentially create that explosion of opportunity. What we really need to do is to take this thing and move forward with the mentality of abundance and create our systems, our funding systems, our business structures, and so on, to be able to reflect that. And women play a great role in this. Now, when we look at a post-COVID world, a new world into the future, by the way, today the world economy is at $90 trillion. At the rate at which we're growing, by 2040, 2045, this will be a $150 trillion global economy. So we are growing at a 50% trajectory. And a lot of that is going to be funded through our financial systems. And the vast majority of that is going to be delivered by startups and entrepreneurs and young people. And I hope that 50%, at least in terms of balance and equity, are going to be women, and we need to support that cause and that future. So in this positive environment, I think what we need to do is to feel good about where we are today, that the fact that we have this opportunity, we're having this global conversation coming together. And I think the world has become global, boundaries have broken down, and therefore I think we need to be able to tap and go beyond our geographical boundaries and look into a much, much wider world. And Karen has been so gracious and generous in offering her services and expertise. And I dare say there will be many, many more. So as we move into this world, we need to look through the eyes of compassion and humanity and empathy and values and ethics, and put all of those things together while we're putting together our technology and business infrastructure. So I thank you very, very much for listening. I hope you enjoyed our conversation, and I hope that you have a few things to take away with you, points of reflection, and hopefully points of action. Thank you. Thank you very much indeed.